All right, hey guys, I figured I'd make a video about my day trading strategy and how I came up with the strategy, and kind of explain a little bit on how my strategy works. Um, so for my day trading strategy, I'm going to tell you what it is first, and then I'll explain it. So I look for a liquidity sweep, and then I look for a 5-minute retrace, and then off of that, go into the 1 minute, and then I look for a 1 minute fair value gap, and then I look for it price to move into that fair value gap and move up, but not break through the fair value gap. Um, and then I look for a break of structure on the 1 minute, um, and then I enter along on on the trade, and I set my take profits at the first candle in the fair value gap, and then I take my stop loss in the first candle of the fair value gap and my take profit at recent lows or recent highs, depending if I'm going long or short. So a liquidity sweep, for those that don't know, let me show you here, is probably the best way to go about it. So liquidity is resting above highs and lows. So we have a high here because there's a move up and then a move down. And then there's a low here because there's a move down, then a move up. So there's liquidity resting under this because there's buy orders and sell orders um, resting resting there. So if we have, let me draw, oops, the price kind, oh, that's bad, but price kind of moves in trends. So we got higher highs. We have a high here, a high here, a high here, and or sorry, this is a downtrend, so there'd be lower highs and lower lows, and then an uptrend, we have higher highs and higher lows. So we have a high here, then a higher high, higher high, higher high. We have a low here, higher low, and then a higher low. Um, so liquidity is in is resting above highs and lows. So there's highs here. So when price pushes past them, they're more likely to reverse because in order for orders to be filled, remember this is we're dealing with an exchange here. So there needs to be sell orders in order to fill buy orders and buy orders in order to fill sell orders. So because there needs to be you need to swap basically when you enter on a trade, you're swapping with somebody else that's going the opposite way. So when you see liquidity or highs, price isn't going to reverse every single time it pushes back here because like we can see here, this is an uptrend and that's not how price moves is in uptrends and downtrends and sometimes sideways. But if price just swept liquidity and then swept liquidity and then swept liquidity and then swept liquidity and then kept doing that, price would go nowhere except just do that and get bigger and bigger and bigger. And there's price just doesn't move like that. Um, so we have to take into consideration time frames and things like that. So higher time frames hold higher powers. So if we go into the 4 hours, or let's go into the daily actually. So we can see here um, on the daily, we can see that see this we have a high here, we got to move up, then a move down. Okay. And then we see this is a high. We see this, and it's a higher high, but then so price goes. There's a high here, and there's another high, which is higher, and you can see it pushes past this, but then ends up reversing. But you could say, well, I thought price moved in uptrends and downtrends. Well, yes, it does, but it also can reverse. Because if it was only in an uptrend, we would just continuously be going up, and if it was only in a downtrend, we'd hit zero eventually. So we can see price pushes up and then reverses. Um, so we have to take that into consideration. Um, and so what I do every day is I'm on market open, I'm looking at the daily bias and seeing what the overall trend is. So we can see here's this is considered an uptrend, and this here is a downtrend. But then we uh, change and we move into an uptrend. So we have to be able to pick out where we think that's going to happen, um, and that's what we're trading off of. So on the 4 hour, I like to mark out highs and lows, um, because I'm day trading here. I'm not swing trading or long-term trading or anything like that. So my trade is going to be opened and closed in the same day. So I don't need to be looking on the weekly, um, to see daily trend or hourly trend basically is what I need. So I can see there's an uptrend here, and then I mark out these highs and lows or whatever. So see this gradual uptrend. I mark out these highs and lows, and then market opens. Say this market opened here. Um, you can see price sweeps this liquidity on the downs or on the sell side, but since we're in an uptrend already, you would think, oh, well, price is going to reverse. Well, no, price likes to move in trends. So if we can see a if we see a sweep of all these this resting liquidity, we can kind of assume price might continue to go up, which we can see we did here. We just sweep these lows, we sweep all these lows, and then price um, goes up. You can see here, um, price is kind of in an ugly downtrend. I'm not sure what's going on with my chart here, but price is in a downtrend. And then we can see price pushes up again to come back down to make that trend, but then price comes down, but then goes up and then skyrockets almost. So we can um, mark that low out and see that. But then, well, not the 4 hours not. It's in a downtrend, so why would you go down? But you can see, I mean, overall on this area here, we had a big uptrend here and a big uptrend here. We just had these mini retraces, and we can see this is just this again almost. So we can assume if we go into here, I don't have it set up, but you take a equilibrium chart and you can see that this is well in equilibrium. So below, it's in a discount. The price is in a discount, so more orders are going to be filled, which you can see they did there. So that's kind of liquidity, um, super fast, but that's basically um, an in-depth, quick view of it. Certainly don't go off of just that. Look more into it. And then off of that, you want to look for a retest of that area. So we can see here, this is not a good place to show it, but if price sweeps liquidity, we want to make sure price is actually going to react off that area. So if we look for a retrace, like we call this a retrace because if price is going down, we can see it move back up and then move back down. We call that a retrace, or I call that a retrace. And then depending on if you're going long or short off that certain trade, you can see. But after you see that, you can see price reacted off that level. So orders were able to be filled in that area. So going off of that, you can go into the 1 minute, and there's multiple different confluences. You can do order blocks, breaker blocks, fair value gaps, inverse fair value gaps, anything really. There's a bunch. I like to trade with fair value gaps right now. Um, and then again, price, this is the fair value gap here. You can see price pushes into it and then continues to go up because it's just reacting off these new levels. And you want to make sure your these this area of liquidity is being reacted off of and moving in the right direction you want. Um, and that helps you determine your trade's going to actually um, has more probability to hit take profit because price is reacting off of it and reacting how you want it to and how it should be in order to reverse trends. Um, but yeah, that's kind of super quick overview of my um, day trading strategy. I might make another video in the future, breaking it down super in detail. But I need to figure out the best way to do that first. Um, but yeah, this is my strategy. Um, Let me know what you think. So far, it's been working well for me. I'm going to keep at it. The biggest thing is discipline and sticking to it and not revenge trading or over leveraging or things like that. But sticking to your trading plan. Um, so yeah, thanks for watching my strategy video, I guess.